A loss of $1,948. That's the trading result from our commodity and futures trading according to COT data for week 46. Welcome to Insider Week. In this video, I'm going to review the trades of this week and the corresponding results. Before we get started, I'd like to make you aware that the Commodity Futures Trading Commission weekly report will be delayed again next week due to the U.S. Thanksgiving holiday. For our members, that means that we will post our analysis and trading plans for the upcoming week within the next business day after the reports are available. Also, for some of you that may not know, you can follow along with our open positions for all of our trading strategies on our website's homepage, which are updated daily. For those of you that would like to follow us into each trading week, you can sign up for a silver subscription that will grant you access to our members-only portal where we discuss our fundamental analysis for 40 futures markets that we trade and our trading plan video for each upcoming week, as well as our trading plan video archive, which is full of great information. Now let's get back to the trades for this week. First, in our COT1 strategy, we went into last week with a long position in soybeans, and at the end of the week, we have a new position in rough rice. When we take a look at the CRB index, which is the commodity price index, we can see that commodity prices moved into a sideways range, but still remained strong against the seasonal trend. This means we will consider both long and short trades according to our three trading strategies. Let's have a look at our COT1 strategy for last week. Here are the markets we identified for possible trades and the direction we expected each market to move. As you can see, we have a mix of markets we believe will both rally and decline. Let's have a look at the trades of the COT1 strategy. The first market is rough rice. On the weekly chart, we received a buy signal a few weeks ago based on our strategy rules and witnessed the market move sharply in the direction of our signal. On the daily chart for rough rice, we waited patiently for the market to go into a correction, and we entered the market with a long position according to our strategy rules. We continue to hold the long position into this coming week, expecting the uptrend to continue. The next market is soybeans. We entered last week with a long position in soybeans, but the market began to move sideways, so we tightened our stop according to the rules of our strategy. The market did not continue to the upside, so our stop was triggered with a small loss. However, as successful traders, we consider this a win for the long-term growth of our portfolio. So due to the loss in soybeans, the results for week 46 of our COT1 strategy is a loss of $5,900. Next, let's have a look at our COT2 strategy, the so-called champion strategy. This strategy is more aggressive and recommended only for advanced traders. As you can see, we started into the week with an empty portfolio, and we ended the week with three diversified positions, namely short positions in orange juice, soybean oil, and soybean meal. We also opened and closed short positions in crude oil and heating oil during the week. Let's take a closer look at these trades. The first short position was opened last week in the orange juice futures market based on COT data and our trusted entry pattern techniques. We expected the market to continue its trend reversal to the downside in this coming week. In the soybean oil futures market, we again opened a short position last week when we recognized a unique entry pattern for our COT2 strategy. As you can see, the daily price range in this market was high last week, so we reduced our position size and therefore our risk according to our successful strategy. In the soybean meal futures market, we also opened a short position at the beginning of last week, but closed it quickly at break-even once we realized a miscalculation in our timing. The correct timing was confirmed a few days later, so we re-entered the market with a short position. The market is moving sideways, so we must wait and see if the market continues in our expected direction. In the crude oil futures market, you can see here that we opened a short position on Thursday, and it reached its profit target very quickly on Friday, so the trade was closed with a profit of $4,980. In the heating oil futures market, you can see we opened a short position on Thursday as well, based on the same entry technique, but it did not hit its profit target on Friday. We decided to go ahead and close the position with a profit of $2,182, as we did not want to maintain our risk exposure in this volatile market over the weekend. We will consider reopening this position next week if the market continues to show weakness. Here is the performance for the COT2 strategy. Our last trading strategy is the weather trading strategy. In this strategy, we combine COT data with fundamental extreme weather analysis to identify strong trends in the commodity markets. We began the week with 4 open positions and ended the week with 5 open positions, adding a short position in rough rice. We also traded cotton during the week, which I will discuss in a moment. Our fundamental weather analysis models anticipate colder than usual weather in the U.S., which in turn will move markets, and we expect to profit from this movement, specifically in rough rice and natural gas. If you will recall from last week, we bought shares in the Boyle ETF as we expected the natural gas market to rally in the coming weeks. Last week, the market moved sideways as natural gas storage rates are high in the U.S. due to the export problems in the Gulf of Mexico. But these should be resolved in the coming weeks and will again put pressure on supply as demand for natural gas grows. In rough rice, we expect the weather to play a role in decreasing the supply of rough rice in the U.S. over the coming weeks. Since we already hold a long position in rough rice in our COT1 strategy, we may reduce our overall portfolio risk in the market next week according to our portfolio management rules. As I mentioned, we also took a long position in cotton, expecting the market to continue its uptrend as the cold weather takes hold in the U.S. Unfortunately, the market moved against us and we were stopped out with a loss. We will continue to watch this market and look for opportunities to re-enter. So for our weather trading strategy performance, our cotton trade did not work out and therefore we realized a loss of $3,210. That's it from our side this week. Of course, we'd love to hear from you. Please share your thoughts in the comments below. Also, please consider giving this video a like and be sure to click subscribe to get notified when we post our next market analysis. If you are new to futures trading, check out our free basic course on futures trading at insider-week.com. We hope this video helps you prepare for the upcoming trading week, and as always, be aware of the risk, because risk and money management is the key to success in trading.